What does O'Reilly Auto Parts, Fastenal, Coca-Cola, and Tesla have in common? Well, they all recently did a stock split. What is that? It is a way that a company issues additional stock. And so think of a 2-for-1 split. If a company decides to issue 2 shares of stock for each existing share of stock, it's like exchanging a $20 bill for 2 $10 bills. There's no change to the actual value of the company. But why would companies do this? Well, it makes the stock more accessible. A lower price means more potential investors. In fact, some funds that purchase stocks have requirements that the stock price must be below a certain amount to provide liquidity. In other words, that they can sell it. O'Reilly Automotive recently did a 15-for-1 stock split. That means for every share you had, you got 15 shares. But guess what? Those shares are now worth 1/15th of what the previous shares were. Fastenal did a 2-for-1 split. Coca-Cola did a 10-for-1 split. In fact, in the past 5 years, some big name companies split their stock. Tesla, well, they had a 5-for-1 stock. Apple in 2020 did a 4-for-1 split. And Amazon in 2022 did a 20-for-1 split. It is not an increase in the value of the company. It is merely making it more accessible so that more potential investors can invest in the company. It also provides liquidity, which is very important. If you have a $3,000 stock and you have to sell the whole stock, it's a lot more helpful if it has a 20-for-1 split and it's now worth $150 a share. Now, if I need some of that money, I can sell a share, get $150 and still keep the other 19 shares. So I hope this helps. So when you hear the word stock split and wonder what that means, now you will be the smartest person in the room.